Welcome to the Nifty Noon Podcast. Today, we're embarking on a focused deep dive into a compelling collection of recent insights from our newsletter.
Yeah, lots happening.
Absolutely. We'll be navigating the incredibly dynamic currents of the crypto world, from the strategic shifts in altcoin treasuries and the critical progress in stablecoin regulation.
All the way to mainstream adoption. It's moving fast.
It really is. Our mission, as always, is to extract the most important insights and surprising facts to help you quickly become truly well-informed about what's been happening. Let's get into it.
And what's truly fascinating here is how these seemingly disparate pieces of news aren't just isolated events. They're converging rapidly, painting a much clearer picture of crypto's accelerated path forward.
Right.
It's about more than just asset prices. It's about infrastructure, policy, and global integration. The pace of change really is quite remarkable.
It absolutely is. So let's kick things off with a major strategic trend we highlighted recently, one that's quietly reshaping how altcoin ecosystems view their own financial foundations. We're seeing leading altcoin projects actually looking to Bitcoin to bolster their treasuries. It's a significant shift in thinking. For instance, the Polkadot community has been engaged in a serious debate about converting a substantial portion of their treasury, specifically 500,000 DOT, which at the time was roughly $50 million, into threshold Bitcoin, or TBTC.
Yes, this isn't just a simple asset swap, it's a strategic reevaluation. Polkadot's reasoning is, well, twofold.
Okay.
First, it's a hedging strategy to protect their treasury against native token volatility and broader market fluctuations. By diversifying into Bitcoin, they're seeking a more stable, long-term store of value.
Makes sense.
Second, it signals strong support for a multi-chain future, demonstrating an embrace of Bitcoin beyond its own network. It's about building bridges, not just silos, in the crypto space.
And it's not just Polkadot doing this kind of thinking. We also saw Cardano's co-founder, Charles Hoskinson, put forward a similar, equally ambitious proposal.
Yeah, that was interesting.
He suggested converting $100 million worth of ADA from their treasury into a mix of Bitcoin and stablecoins. His stated goal was to address Cardano's relatively low stablecoin to DeFi ratio and inject much-needed liquidity directly into its ecosystem. Now, anytime you talk about moving that much capital, especially native tokens, controversy is bound to arise. What are the main points of contention here?
You're right. These proposals are definitely sparking lively debate. On one side, proponents like Hoskinson argue that diversifying into Bitcoin, which has a proven track record as a long-term store of value, often referred to as digital gold, is a prudent risk management strategy for operational continuity.
Right, the stability argument.
Exactly. Hoskinson even suggested using time-weighted average price, or TWAP orders, a common institutional trading strategy, to minimize the market impact of selling ADA.
So, spread out the sales.
The idea is to spread out the sale over time to avoid sharp price drops. However, critics are raising some very valid, pointed concerns.
Okay, what are they saying?
Their primary objection often revolves around timing. They question the logic of selling native tokens like DOT and ADA when they're trading near yearly lows, only to acquire Bitcoin when it's hovering near its all-time highs.
Selling low, buying high. Not ideal.
Could be seen that way, yeah. Which goes against conventional financial wisdom. There's also the immediate concern about creating additional sell pressure on the native assets.
Did we see that happen?
We actually saw Cardano's ADA token dip by about 6% shortly after this debate began, illustrating the market's sensitivity. It's a delicate balance between long-term strategic hedging and short-term market impact. What's also worth noting is that even as these altcoins were contemplating these big moves, Bitcoin itself showed resilience, seeing a slight increase of 1.51%, reaching around $106,777, as we highlighted in our newsletter around June 16th.
That context is absolutely vital. And speaking of significant shifts in how Bitcoin is being viewed, another development last week really underscored this trend, but from a completely different angle. A major filing from Trump Media.
Ah, yes, the ETF filing.
We learned from our newsletter on June 17th that Truth Social, their social media platform, filed an S-1 with the SEC. That's the initial registration statement a company makes. Well, you know what it is.
Right.
In this filing, they proposed launching a spot Bitcoin and Ethereum ETF.
This isn't just another ETF filing. It's definitely a politically charged statement. The proposed allocation, 75% Bitcoin, 25% Ethereum, with Crypto.com set to be the custodian and liquidity provider. It positions a prominent media entity firmly in the crypto space.
Yeah, and it aligns, as you mentioned, quite closely with the Trump family's existing interests including their DeFi project, World Liberty Financial.
Exactly. It broadens the potential investor base beyond traditional crypto enthusiasts, bringing in a demographic that might typically be more cautious about digital assets.
It definitely blurs the lines between traditional finance, political movements, and digital assets in an unprecedented way.
Exactly. And it's not happening in isolation. This filing by Trump Media and Technology Group follows the SEC's earlier approval of their $2.3 billion Bitcoin treasury deal, which itself was groundbreaking.
That was huge.
If this ETF proposal gains approval, it would join the ranks of established crypto ETFs from major players like BlackRock and Grayscale, further normalizing digital assets for mainstream investors.
It really signals a deepening institutional embrace.
And we saw other signs of that embrace, too.
Right, absolutely. To reinforce that point, our insights from that day also highlighted MicroStrategy continuing its aggressive Bitcoin acquisition strategy, picking up another 10,100 BTC for about $1.05 billion.
Wow.
And even sovereign entities are active. El Salvador, under President Bukele, bought another 240 BTC. These aren't just isolated events. They represent a fundamental shift in how corporations and governments are viewing Bitcoin as a core asset. This definitely paints a picture of broadening adoption and changing perceptions. With all this institutional and political movement, the natural next question becomes, what about the regulatory landscape? And here, we saw some truly landmark news last week with the passage of the Genius Act.
Indeed. We highlighted in our newsletter on June 18th that the U.S. Senate passed the Guiding and Establishing National Innovation for U.S. Stablecoins Act, or Genius Act, with a decisive 68-30 bipartisan vote.
Bipartisan, that's key.
Huge. This marks it as the first major piece of digital asset legislation to clear the Senate. This isn't just regulatory clarity, it's a foundational step.
It's a huge step. So what does this actually mean for the future of stablecoins and, by extension, the broader crypto market in the U.S.?
This is being hailed by many in the industry as a truly historic step forward. The Genius Act establishes crucial guardrails, mandating that stablecoin issuers back their tokens one-to-one with cash and short-term U.S. treasuries.
One-to-one backing.
Yeah.
Finally.
Yes. It also imposes strict transparency requirements and robust regulatory supervision. Proponents believe this will unlock massive potential, paving the way for stablecoins to move beyond just crypto trading and into mainstream payments, remittances, and even corporate treasury management.
So, much bigger potential use cases.
Exactly. However, it's important to note that it wasn't without its critics. Lawmakers like Senator Elizabeth Warren raised concerns about potential loopholes for foreign tokens and what she perceived as conflicts of interest, especially related to President Donald Trump's involvement with the stablecoin issuer.
Were those concerns addressed?
Those objections, despite being vocalized, didn't lead to amendments addressing those specific issues before the bill passed. Regardless, the market seems to be betting on its success. Treasury Secretary Scott Bessent even projected that with such regulation, the stablecoin market could potentially grow to nearly $3.7 trillion by the end of the decade.
$3.7 trillion. That's a staggering projection indeed. But what would be the biggest hurdles to reaching that mark? Are there still significant regulatory or adoption challenges?
That's an excellent question, and it highlights the ongoing challenges. While the Genius Act provides clarity, enforcement mechanisms will be critical, and there's still a patchwork of state-level regulations that need to be harmonized.
Right, the federal versus state thing.
Exactly. Furthermore, broad consumer and business adoption outside of crypto still requires significant education and infrastructure development. The projected growth assumes a high degree of integration with traditional financial systems.
And that takes time.
It means overcoming inertia and established practices. Think about it. Wall Street giants like JPMorgan are already pushing into this space, launching JPMD, which is a USD deposit token, on Base. That's Coinbase's own high-speed blockchain network.
Built on Ethereum, low cost.
Right. And Coinbase itself is actively seeking SEC approval for blockchain-based stock trading. These parallel moves by TradFi giants reveal a fundamental re-architecture of finance itself, but it won't happen overnight.
That's a powerful point. The market's immediate reaction to the Genius Act certainly echoed the sentiment of major optimism, though. As we reported in that newsletter on June 19th, shares for Circle,
Yes, Circle,
the company behind the popular USDC stablecoin, soared over 30% immediately following the Senate's passage.
That was an extraordinary surge for Circle. This latest rally added to what's already been an incredible trajectory for the company, seeing its stock price climb more than 500% since its public debut on June 5th.
500%.
Circle CEO Jeremy Allaire captured the sentiment perfectly, declaring, "History is being made." This immediate market validation signals immense investor confidence and suggests that the Genius Act could indeed be a major catalyst,
Accelerating things.
accelerating broader stablecoin adoption far beyond just crypto markets and into mainstream payments and settlements.
It really feels like the tipping point for widespread adoption.
It does. And further reinforcing this trend, we saw a healthcare firm, Prenetics, buying $20 million worth of BTC and adopting a Bitcoin treasury strategy.
Mirroring the altcoin discussion, yeah.
Exactly. Plus, Coinbase Derivatives is deepening its roots in traditional finance, partnering with Nodal Clear, a major clearing house that ensures trades are settled correctly, to allow USDC to be used as collateral in U.S. futures markets.
USDC as collateral for futures. That's big.
This level of institutional acceptance and the accelerating real-world applications are a clear signal of the shift happening.
It's clear stablecoins are gaining serious momentum, not just here in the U.S., but truly on a global scale. We highlighted a significant international push in our newsletter on June 20th. Payment giant Visa is making a major move into the African crypto space.
Ah, Visa and Yellow Card.
Partnering with stablecoin payments provider Yellow Card Financial.
This partnership is incredibly significant, especially for the African continent. Their collaboration aims to promote the use of stablecoins for cross-border payments across the 20 African countries where Yellow Card operates.
20 countries, that's broad reach.
The goal is clear: streamline treasury operations and enable faster, more cost-effective money transfers, with plans to roll out stablecoin transactions with Visa in at least one country this year.
And what's driving this particular focus on Africa for stablecoins? It sounds like there's a strong underlying need.
There absolutely is. This stablecoin boom in Africa is largely fueled by several critical factors: limited access to physical U.S. dollars, ongoing foreign exchange crises in many African nations that make traditional remittances expensive and slow,
And inflation too, I imagine.
and significant inflation in local currencies. Stablecoins offer a practical digital solution for these challenges, providing a reliable medium of exchange for individuals and businesses alike.
What kind of volume are we talking?
Our data shows that stablecoins already account for approximately 43% of sub-Saharan Africa's total crypto transaction volume between July 2023 and June 2024. That's a massive percentage.
Nearly half. Wow.
This institutional push is also happening alongside an improving regulatory environment. Countries like Kenya, Mauritius, and Botswana are actively working to establish clearer rules for digital assets.
Which makes companies like Visa more comfortable.
Exactly. It provides the necessary framework for traditional finance players to enter the market. The synergy between TradFi titans like Visa and crypto-native companies like Yellow Card truly validates digital currencies as a key part of the future financial system.
And this global theme keeps popping up.
It does, and this global movement isn't isolated. We've also seen Arizona's Bitcoin Reserve Bill revived, potentially setting a precedent for state-level crypto holdings, and X, formerly Twitter, CEO Linda Yaccarino, stating users will soon be able to make investments or trades directly on the platform.
X getting into trading.
Interesting.
It shows how profoundly integrated crypto is becoming across all sectors.
What an insightful deep dive this has been. From altcoins looking to Bitcoin for stability, to the landmark regulatory clarity for stablecoins in the U.S., and their undeniable surge onto the global stage in places like Africa.
Yeah, connecting the dots. We've seen a clear theme emerge: the rapid convergence of traditional finance and crypto. It's about increasing clarity and continuous innovation, driving new use cases and adoption globally. It's truly a compelling time to be staying informed in this rapidly evolving space.
It absolutely is. If altcoins are strategically moving to Bitcoin for long-term stability, and stablecoins are not just gaining regulatory clarity, but also rapidly achieving widespread global adoption as a core financial utility, what does this tell us about the future structure of the digital economy? Is this the decade where crypto truly goes mainstream, not just as a speculative asset, but as the fundamental underlying infrastructure for global finance? And what will that mean for the traditional banking system, for international trade, and even for individual financial sovereignty? This raises an important question for all of us to consider as these trends accelerate.
Food for thought indeed. Thank you for joining us on this deep dive into the latest in crypto. If you found these insights helpful and you want to stay on top of these fast-moving developments every day,
You definitely should.
please make sure to subscribe to our newsletter at niftynoon.com. That's NIFTYNOON.com. You can find us on Substack too. We appreciate you tuning in, and we look forward to our next deep dive.